Today's phenomenal interview is with Zach Haptonstall. Zach is an investor in Phoenix, Arizona, who's gone from buying his first 36 units as a tenant in common to now owning 700 units in 24 short months. So quite incredible, really. And he's a young guy. He's 29 years of age. So today's a phenomenal conversation. We talk about so much good stuff. So make sure you tune into all of that because this one you don't want to miss. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Zach Haptonstall. How are you doing, Zach?
I'm doing great, Barry. Thanks for having the show, man. I appreciate it. I'm excited to get in the ring here with you.
Yeah, let's wrestle with some real estate. Absolutely, man. Well, I'm excited to have you, man. It's going to be a fun interview, no doubt about that. But before we kind of jump into all that fun and good stuff, do you want to give people a little bit of an introduction into who you are and what you've been up to?
Yeah, absolutely. So yeah, I was born and raised here in Phoenix. Pretty much lived here my entire life and had a background in journalism and then healthcare marketing, and just decided those things weren't for me. So a few years ago, I pivoted into real estate and learned about multifamily and syndication, and just went full blast. So we've been very fortunate, Barry. In the last 24 months, we've acquired about 100 million worth of multifamily, all here in Phoenix, and we have another about 94 million under contract to close in the next few months. So we've just been fortunate that it took a long time beginning, but we caught that momentum to start being able to scale. So I've been very blessed.
I don't buy the fortunate part at all. I think you guys are very talented, very hardworking, and fortune favors the brave, and also luck is where hard work meets opportunity, right? So I don't buy the fortunate part. You guys have obviously put a lot of work in and a very smart group. So
no, thanks.
You were in journalism initially. What made you want to go that route?
Yeah, so I had a division. I played college football at a little school. Okay, so I had a Division II scholarship in Colorado. Went there, then I played a little bit of junior college, and I realized I wasn't going to make the NFL. I wasn't big enough or strong enough like you, Barry, or I wasn't a big enough athlete to make it to the NFL. So I was like, okay, I want to be a sports reporter. So I got a journalism degree at Arizona State here at their journalism school, Walter Cronkite School. So I was a live news anchor and a sports reporter for Arizona PBS, and I hosted a show on Fox Sports Network for a bit, which was cool at first, being on TV and the adrenaline and everything. But then I just quickly realized you work crazy hours. You don't make hardly any money. It's very political. I didn't want to do that. So I got out of it. So that was my short journalism stint.
Oh man, I'm going to have to look up some videos of you now.
Yeah, there you go.
Yeah, that'll be interesting. Yeah. Well, so you said you pivoted to marketing, I believe you said, right? But then what took you? So those, to start off with, those are kind of different fields, but then to go into real estate syndication, which is a completely different field again, I'd say, even though there is always similarities, so a lot of stuff that all of us do.
Right.
But as a career path, I'm sure most people would say that's a different way to go. What was it that brought you to real estate syndications?
Yeah. So I was working for actually a hospice organization, doing marketing for a hospice, and I became a co-owner in that company, and I did well. I was blessed to do well, but I just got burnt out. Honestly, I was just working crazy hours, always on the phone, always on call, 7 days a week, and so I really was in search of some type of like passive income or some vehicle to gain more control back of my time. And I didn't know anything about multifamily, Barry, or syndication. Okay, I had no family in it. I had no like rich uncle or anything. It was January of 2018. I just got so burnt out. I said, screw it, I'm done. I want to do something else, but I don't know what I want to do, but I don't have any time to even figure it out. So in January of 18, I resigned and I sold my equity in this company that I had, a little bit of equity, and I lived off savings for well over a year. Okay. And the whole goal was to try to figure out how to make money through real estate. And so I initially was looking at flipping houses, believe it or not, and realized that's not for me. That's transactional mindset. It's not why I got into this. And then I learned about mobile home parks, and I had cold called over 90 mobile home park owners in a Mesa Apache Junction area here in the Phoenix metro, and tried to buy one on a seller carry. And it didn't work out, but I learned a lot. Okay. And then I started learning about multifamily by listening to like podcasts like yours and reading books, and started going to conferences. I learned about multifamily and syndication and realized that's what I want to do. That's where I can really leverage my time and leverage investor money to go bigger and benefit the investor, benefit us. So that's when I really focused in and decided I wanted to do that. So it was definitely a journey. It's not like I knew I wanted to do multifamily or syndication, because I didn't even know what syndication was at the time, to be honest. So it's kind of funny how it worked out.
Yeah, but was there anything in particular led you to real estate as in general? Because you said that you started looking at flipping. You know,
Yeah.
because you could have got anywhere out, right? You have that freedom to do whatever you want at that point. You could, start your own business, invest in the stocks, Bitcoin, whatever you want at that point, right? What was it about real estate and what brought you to that, you think?
Yeah, good question. There were a few key factors. I mean, I think one of the things is that I had just known that real estate was one of the biggest industries, in the world. And you always hear that there's more millionaires made in real estate than anywhere else. So for me, the more I had learned about it and heard about it, I realized like, okay, if I want to become successful and become wealthy, I don't have to be Elon Musk. I don't have to create something or be an inventor. I can follow a blueprint that somebody else has already drawn out, and I just have to really grind it out and work hard and hustle and follow that blueprint, and I can be successful. So that's what really attracted me to real estate in general, is that anybody can really do it. It was actually a month before I had quit the job. I was at a Christmas party, a family Christmas party, and this guy was a family friend. I had never met him at the party. I started talking to him, and he owns several mobile home parks. Okay. And he was telling me about how this works. And then this is a cliche story. I'm sure you've got it from many of your guests on the show, Barry, but he told me to read Rich Dad, Poor Dad, which I did. I read the book, Rich Dad, Poor Dad. That really helped change my thinking as well, where I'm thinking of buying assets instead of just always working for money. So there were a couple different things that really just resonated me with real estate. And that's why I was interested in it.
Yeah, and I love what you say there about, and it's so true, right? That there's the cool thing about real estate. You don't need to blaze your own path, right? You don't need to create a different investment niche, strategy, business plan, or anything like that. Everything you need to know to become very successful is all out there, right? Whatever you want to be in real estate, whatever capacity, whatever strategy, it's all out there. Just follow someone else. Find out what you want to do, who you want to be like, and then just follow that, right? And it's just amazing. I think not enough people realize that all the information that they need to be a millionaire or multimillionaire, billionaire is out there.
100%, 100%. Yeah, you have to just absorb it and you have to apply it, right? And you have to make things happen with people. Really, it comes down to knowing how to do it and then putting together the people and the deals and the money, and it all comes together.
Yeah. How did you get started then? Because obviously with a flip, right, the barrier to entry is pretty low in terms of a flip, and in terms of, I'm not saying you don't need to be knowledgeable, and you don't need to have skill sets, but it's a lot different than buying a 100-unit apartment complex, right? That's a completely different animal. So starting out, how did you get started, and what was your path to that first deal?
Yeah, good question. So like I said, basically when I quit the job, I said, okay, I'm going to live off savings and I'm going to figure out how to do this. And I didn't even decide on multifamily probably till I was at least 3 to 4 months into that process. So I was already burning through money, right? I was burning through savings. I had cut down a lot of my personal expenses to try to stay above water, so to speak. And but by the time I had finally focused, this is multifamily, this is what I want to do, then I was just constantly in search of trying to find deals. Okay. And so after I had listened to the podcast, read the books, et cetera, I realized I need to put a team together or actually take action. And so what I first did, Barry, is I went online and I looked up what are called accredited management organizations, okay, which is basically it's a legitimate property management company. And I reached out to, I either emailed or cold called them on a phone, 5 of the top property management companies in Phoenix. And I made 5 pages of questions. Okay. All these questions I had created and I probably looked like a nerd at the time, but I thought I was really cool and smart. Right. So I had all these questions about like operating, accounting processes, et cetera. And so I started to interview these different property management companies. I wear a suit and I fake it till I make it. I was super nervous, have a lot of anxiety because you feel like you don't belong, right? You feel like you're a nobody in this industry. And it's very intimidating with these big buildings and these big numbers, and you're not a part of it. So you feel like you're an outsider, but I wear a suit, and I did have physicians and healthcare business owner friends who said they'd be interested in investing in something like that. And so when I would go to these meetings, I just act like, I mean, you have to be humble, but you have to be confident, right? So I kind of act like I'm the man. I said, we have a group of investors. We're entering the market. This is our criteria. And I ask all these questions, and build credibility with these property management companies. And at the end of it, Barry, what I would do is I would ask the management company, can you give me a few brokers that that are in my space and fit my criteria? Can you give me some real estate attorneys? Can you give me some lenders, et cetera? And so what I would do is I would build off of all these referral lists, and I'd call the person up, say, hey, my name is Zach. I just got your name and number from so-and-so ABC Property Management Company, and they said you'd be great. Can I meet with you? And so I would leverage that to try to meet with all these different professionals, okay, and get in front of the brokers and the management and the lender, et cetera, so that I have somewhat of a team, okay. And then I started to start to tour assets, start to underwrite deals, and it was really tough, because there's a lot of things you have to have. I didn't have net worth and liquidity, for example, to sign on these loans, okay. So as I was going through all these conferences, mostly based in Dallas, I met my first business partner, Robert Shefchick, and he lived here in Phoenix as well, and he had net worth and liquidity. So we decided to partner up, and 10 months now had gone by, Barry, since I quit the job, and we finally found a deal. We had underwritten tons of deals. None of them made sense. None of them penciled, but we finally found a deal. It was 36 units, 3.4 million in Phoenix. And so we make an offer on it, and then the offer gets accepted. And we're like, oh crap, what do we do now? We didn't get accepted. So then each of us, Robert and I, we go non-refundable for 25K. Okay, so we had 25K non-refundable. We had to raise 1.4 million, and our plan was to syndicate it. So we go out to all these people we had talked to in the previous months who said they were interested in investing. Nothing. Nobody wants to invest. It's just silent because we had no track record. We had no credibility. It's tough. And so we kind of had to scramble. And long story short, I found a lady, and her name's Elisa Zhang. We had met at a conference as well, and she had just sold a 12-unit deal in Seattle. And so she actually 1031 exchanged the deal into ours and brought over 600K. I found a few other guys to bring 150K or so, and we put it together. I had about 165K or so at the time left, Barry. I put 160K into the deal.
Wow.
So I was almost all in. I was basically all in, okay? And because I wanted investors to know, or anybody I'm telling, that I've got skin in the game and I believe in it. So I was all in on that deal. It was a tough closing because we had not a good seller, honestly. On these smaller deals, sometimes you get these unsophisticated sellers who are kind of jerks. So anyways, 4-month escrow, we got it closed in February of 19, and it went really well. We just sold that in October 4 or 5 months ago. It was a 21-month hold, and we achieved a 1.9 equity multiple and a 44% IRR. So long story short, it was good, but that was the first deal. We actually did not syndicate it. We did a TIP, which is a tenant in common. And we took a few people and put them together and then executed the plan so that we could learn firsthand how to execute a value add business plan and go through all those challenges of learning it, which gave us confidence and experience to then start syndicating deals and taking investor money.
Yeah, wow, cool story, man. That's really, really cool. A lot of stuff from that, from my perspective, is, for one, the team building, right, is so important to start off with. And people always ask, how do you build a team? Well, I always say, and I've always heard as well, and people much smarter than me have said it, is that you start with one person, right? You started with the property managers. I started with a broker when I was building my team, but it doesn't. I don't think it ultimately matters. But from that person, referrals are so important, right? Because especially if you make a good impression with these people, start off and they want to work with you, they're not going to give you bad referrals. Because if they give you a bad referral, well, you're probably going to be like, well, this is a bad reflection on this person, right? They want to work with you. They want to give you good referrals. So that's a great place to start, right? Because you've got to start somewhere. So you might start with that. Out of interest, why did you start with the property manager? Why was that the first team member that you kind of went?
Yeah, no, good question, Bear. I felt like the property manager. I mean, and just from listening to podcasts, reading books, it seemed like it was the most pivotal person or the most pivotal partner, so to speak. That you have a good management company who's going to kind of hold my hand through a due diligence inspection period and really lean on them. So to me, the property management seemed like the most important, and I was kind of looking forward to meeting the other professionals in real estate and being able to tell them, yeah, I'm working with so-and-so management company, just to give me some like perceived credibility when I'm talking to brokers or lenders, things like that.
Yeah, and that's very smart, because obviously, I'm sure you'll attest to this. When you start speaking to brokers, to lenders, to these people, without that track record, without that necessary credibility, right? You're trying to gain that credibility. That's what you're doing initially to start off with. It's like treading water a little bit to start off with. You're trying to keep your head afloat and trying to let people know that you're serious, that you're going to do what you say, and that you're going to close on these deals. But with that, these people don't know that, right? So if you have a team member, which is a good property manager, a well-known property manager, you could be like, hey, we have on my team, we have XYZ, right? And then they take you more seriously, because even if they know that you don't have that experience, you don't always, that's the great thing about syndication and about multifamily. You need experience, but it doesn't need to be your own, right? It's like money. You don't need, money, but it doesn't need to be your own. And by having that team member to start off with and be like, hey, I have XYZ property management company that I'm working with, that I'm sure that helped with the credibility with brokers.
100%. It really does. Yeah. And people will actually meet with you where they may not have otherwise, right? If you get a referral, the broker might say, okay, I'll meet this guy for coffee. Whereas if you're just a random, then they may not, so I think it helped for that too.
Yeah. And you mentioned it there on that first deal you did, take a tenant in common rather than a syndication. On a high level, do you want to explain maybe the differences? And again, this is not legal advice. It's not an attorney. It's not a blah, 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 blah. Yeah, absolutely.
Good point, Barry. So a ticket is similar to like a JV, a joint venture structure where let's just say Barry and I want to go buy a deal, and Barry, you have 900K and I only have 100K. Well, what we can do is you create an LLC, okay, and you'll have your 900K held in your interest. You'll be what's called tenant in common, or TIC LLC, and I'll have my own TIC LLC, and we'll be tenants in common. Okay, so the difference is that, and like you said, I'm not an attorney, so consult your attorney, but legally all the voting has to be unanimous. Okay, so even though you own 900K, you own 90% of the deal, and I only own 10% of the deal, but everything we do, you have to have unanimous voting decision-making rights. Okay, so we need to really get along as far as my TIC and your TIC, and some of the cool things that you can do that just give you flexibility is that you can 1031 exchange into them or out of them with a lot of flexibility. And what I mean by that is, let's say we do a really good job, Barry, we double our money, right? And we're going to sell it, and we decide that we both want a 1031 exchange together and continue the partnership. Well, your 900K is now worth 1.8 million. And so you can 1031 that into the next deal. My 100K is now worth 200K, so I can 1031 it into the same deal alongside you. And so now before we had $1 million together, now we'll have 2 million together, and we can leverage that together into the next deal, not disrupt our entities, and still have the 1031 in place. Or if we decide you want to go buy a deal, but I say, I don't like you, Barry, or I don't like the deal, I'm going to go my own separate ways, I can decide to 1031 somewhere else, or I can just sell and pay capital gains, and you can still 1031 exchange your pot and defer that capital gain tax. So it's nice because it gives you more flexibility to enter and exit a deal. And it's better if you have like a smaller number of investors with bigger chunks of money. Okay. And these investors, by the way, have to be active. So they are not passive investors like in a syndication, right? With a syndication, you have an active GP. You may have several limited partners who are silent or don't make decisions. Whereas in a TIC, everybody's active. And so you need to trust them and kind of get to know them a little bit, feel comfortable with them. And yeah, those are the main differences between a TIC and like a syndication model.
Yeah. And it's definitely something worth having in your toolbox, right? Because not every time a syndication is perfect for what you want. And like you said, if you have an investor as well that's bringing in a lot of equity from a 1031, because I think there's ways to do it. I'm not fully aware, but that you might be able to do a 1031 into syndication. But I think for sure a TIC is one way you can always do that, because it's challenging. Because usually if you do a 1031 into syndication, they have to sign on the loan or something along those lines, right?
Yeah, you can do like a TIC syndication. But basically one important thing to know is that when you're doing a 1031, in order to stay compliant with the 1031 rules, the LLC has to buy the new property directly. Okay, so let's say you had Barry LLC, Barry, that you just sold a property with, and you want to participate in a syndication. Well, with these syndications, the way we structure them is that we create a new LLC for each syndication that buys the property, and all the passive investors are buying shares of that LLC. That's how they're investing in the deal. With a 1031, you cannot take your LLC and buy shares of another LLC into the syndication, because it's not buying the property directly. You're going through an LLC. So what you have to do is your LLC has to buy the property directly alongside the syndication LLC where all the passive investors are in. And what that does is that creates a tenant in common. Now these two LLCs are now tenants in common, and you have a tick now where the LLC with all the investors has to vote the same or agree with your LLC. So you can absolutely do it. It can make it more complicated. You may not want to have one guy's LLC having voting rights alongside an LLC with a ton of passive investors. We've said that we may do it if only if it was a very large amount of money coming in the 1031 exchange to justify it, just because it does make it more complicated for like your loan paperwork, et cetera, things like that. So it is definitely possible. I know guys have done it. You just want to make sure it's worth it.
Yeah, it's really interesting. That stuff is really interesting because it's not that commonly talked about, but
Right,
but that's the cool thing about real estate. There's so much flexibility and everything. There's ways around everything, right? It's really cool.
You can be creative, yeah.
Yeah. So that first deal, what when you guys were looking, and you said you guys looked at quite a few deals, what was it about that one deal in particular that attracted you guys to it?
Yeah, honestly, so it just penciled, and this happens sometimes, Barry. I say sometimes it's rare that these deals that are on the market pencil, because it does not happen often. And whenever we find one that we underwrite it and we're like, it works. What do we do wrong? Like, what's going on here? We have to continue to look at it.
Yeah,
the deal just worked, but it was 36 units, great unit mix. It was 26 2-bedrooms and 10 3-bedrooms, so all twos and threes, right across the street from Grand Canyon University. All classic. So all the interiors were classic. I mean, the property itself was in kind of rough shape, to be honest with you. But basically our business plan was we went in there, we replaced all the roofs, brand new roofs, all new exterior paint, new landscaping, recoated the parking lot, restriped it, put up new security cameras, and then we renovated 26 of the 36 interiors with new flooring, countertops, cabinets, paint, lighting, etc. So we just felt confident that there was a lot of meat on the bone. And whenever we make an offer, I personally secret shop all the comps. Okay, so I'll drive to all the comparable properties in the area that are similar size, age, finishes, etc., and look at what are they getting, like what are their rents, what is the price per square foot, etc. So when we shopped the comps, we felt very confident that we could hit our pro forma rents and that they were already being achieved in the submarket. And with those pro forma rents in our business plan, the deal worked. So that's why we felt excited about it, and that it would pencil, and we did really well on it, fortunately. So it was good.
Yeah. Why did you guys only renovate 26 out of 50? Was that to leave meat on the bone for the next semester, or did someone you were planning on renovating those, but someone came in with an offer that you couldn't refuse?
Yeah, no, good question. Good question. So it was kind of a combination of the two. Is that we did want to leave meat on the bone for the next time. We didn't want to fully renovate the entire property. And it just got to the point where we were exceeding our rents so significantly. We were blowing our projections out of the water. Okay. So we were pushing our NOI higher and higher than we had even planned, to the point where we were like, you know what, there's no sense in us continuing to spend money to renovate units when we're already good. We have 10 classics left and we pushed this NOI pretty high, and we decided it's probably time to sell. So it was kind of as we went along, we started getting much higher rents than we had predicted or expected, and that was a big part of it too.
Was that just the market being on fire, or were you guys doing anything in particular to get the higher rents?
Yeah, I think it was just a combination of a couple things. I mean, what we have to so in Phoenix, I mean, as you probably know, Barry, so Phoenix is one of the hottest multifamily markets in the country, if not the hottest, and with that comes competition. Obviously, the prices are getting more and more expensive. And so in order for deals to work for us, to pencil, they not only have to have that value add component like everybody's looking for, but we also need to see that there's loss to lease in place. Okay. Meaning that those rents are currently not at top of market for the level that it's at. So even for a classic unit, if there's loss to lease where we can push those rents up immediately once that lease expires by doing nothing, then that's what really makes these deals work for us, where we can burn off loss to lease, push those rents up, and then we can do value add on top of that. And so my point is there was a lot of loss to lease at this property, which helped us to push those rents up significantly. And then, just executing on the plan, and then the market can make anybody look smart, right? It's a strong market, and and it raises all ships, as they say. So that was a huge help. Obviously, that was a big part of it.
Yeah, absolutely. Well, you guys were obviously underwrote the deal, and well, you guys had a business plan going on, and you underwrote conservatively, so that all those things they pay off for you in the I was going to say in the long term, but this was in the pretty short term, which is good, which is great. And people always talk about the business plan, right? And people might be listening to this trying to figure out, well, you guys did quite a bit, right? Especially on you put new roofs on, landscaping, the parking lot, security cameras, etc. How do you come up with a business plan? Is it just you and your business partner, or is it the property manager? How do you decide what to do? Because there's 10 million things that you can do to any property, right? How do you decide what is best for you and what you guys are trying to achieve?
No, it's a great question. It's a great question. And I think it's a combination of some of those options that you listed. And as you do it more, I mean, over the last few years, we feel like we've gained a lot of experience just by seeing what works and what doesn't work. You start to really refine that criteria. But yeah, I think initially, if you're starting out, then you do need to rely on somebody who has experience in the market. So if you're fortunate to have a partner who has experience, like you were saying earlier, if you can find somebody like that, they might be able to give you guidance. Your property management company is going to provide a lot of insight, but you have to take that with a grain of salt too, right? Because you got to be aware of, for example, a lot of operators have their management companies do all their renovations, which we used to do that. And it can be a good way to start, but you have to understand that they have a margin that they're making as profit there, right? So they're incentivized to jack up the renovations and tell you to create the Taj Mahal when you don't necessarily need that. You know what I mean? So you have to kind of be careful with that. On this particular deal, what I had done is there was a guy I had met who had bought a few deals, who was experienced, and we actually brought him, his name was Tom. We brought him into the deal and gave him sweat equity in exchange for overseeing all of our construction so we could learn an asset management. So we gave him sweat equity in the deal. We had a third-party management company managing it, but they did not do any of our renovations or construction. They gave us some ideas on what they thought would be good for the submarket, but I really had Tom kind of leading the way here. And Tom's a great guy. He helped us on this first deal. We haven't partnered with him since then, just because it hasn't made sense, but it was good to have his expertise in that first deal. So he was really using his construction crews, overseeing it and making recommendations on what we would need to do. And what you'll learn quickly when you're doing this value add multifamily, where you're working with workforce housing, right, is that you don't need to over improve things. Okay. So there's certain submarkets in the country, across the country, and especially here in Phoenix, where you may get just as good of a rent, if not a better rent, by putting in black appliances instead of stainless steel appliances, because that's what the demographic likes. So there's all these little things that you need to know, and it's really relative to your local market. But by talking to property management companies or other owners, or if there's any type of tenant feedback, you can get a good idea of, depending on the area and the asset, like what is necessary to achieve the rent and what's appropriate for that area.
Yeah, and I love what you said there about how you worked with Tom, right, on brought him in and gave him a portion of the deal, right? You could have paid him a flat fee or maybe try to get him in another way, but by giving him a portion of the deal, for one, he's invested in the deal, right? It's in his best interest that the deal does well, because he has a portion of the deal. So the more the better the property does, the more that portion is worth. But also, it's good for people to hear that it's okay to give part of the deal away, right? You don't need to keep all the pie for yourself, right? If it benefits you and if it benefits the business model and it benefits any investor that you bring on the deal to give away a portion, don't be afraid to do that, because it's essentially further down the road, you're going to be better off, because he was overseeing it, right? He had the best interests of you and the property in mind, and that, I'm sure, helped the success of the property.
100%. Yeah, you're exactly right, Barry. That's what I always tell people, especially in the beginning, is that, and throughout your life, I think you should have this, but you should have an abundance mindset, right? Mm-hmm. As compared to a scarcity mindset. And a lot of people say that, and it sounds like a cliche, but it's true, right? So if you can bring in valuable people, or maybe you don't even hardly make any money on your first couple deals, but you're learning a ton and you're gaining experience, then that's invaluable, right? And if you learn how to do this and you have years and years ahead of you, then you can make a ton of money. But yeah, you need to try to bring in anybody who can be valuable, whether it's a strategic partner or it's just for one deal, whatever it may be, then you should do that to help you out.
Yeah, for sure. It's like say when you're starting out, that experience is worth more than the money, right? Unless you get a killer deal, of course, right? And $10 million is $10 million, but you're not going to get there. The first few deals is that experience, is that capital. That experience is the value that you're getting out of it more than anything else. So I think that's a great point. So how did you go from that 36 unit? Obviously, we can't dive into everyone, but give us a rough idea and a high level view of what it took to go from that 36 unit, that first property, to where you are now, at 700 units.
Yeah, absolutely. Yeah. So yeah, like I said, it's like with anything, it takes a long time in the beginning and it's a grind. So I spent 10 straight months with nothing else to do. This was my only focus. So it was very defeating certain days. You lose all your confidence and you wonder, what the hell am I doing? Like, why am I doing this? I'm not making any money. You feel like you're not making traction. But anyways, so 10 months go by, we get under contract, we close 4 months later. So it's been 14 months to quit my job. And I put all my money in that deal. So now I'm totally broke. I have no money, but I was with my then girlfriend, now my wife. And I was just saying, Grace, like, I just thought of this. We're sitting on this house. I had bought a house a few years earlier. I have all this equity. So I got to unload the house. So I immediately sold the house and I had a little over 100K of equity. The week after it closed, Barry, I wired all that money, over 100K non-refundable, into earnest money for a portfolio of 2 deals we had just won, a 76 unit and a 59 unit. And so what we ended up doing is we did another tick, a tenant in common on the 59 unit deal in Scottsdale. We had a couple people come in at like 500, 750K, like a couple big money investors. So we did a tick on that one. And then we syndicated our first deal, the 76 unit. And that was just a culmination of really all the conversations I've had, partnering with a couple of the right people to get that one done. And then we just started to really gain momentum, and we just started getting more deals, attracting more investors, and be able to syndicate these deals. And so we did 4 deals that we closed in 2019. We closed a couple deals in 2020. Obviously, COVID slowed us down for like a 6-month period there. And now we've been fortunate to really gain traction with the brokers, okay, and get off-market deals. So the last 4 deals that we've acquired, which has been over the last 12 months exactly, we're all completely off-market, no competition. We have an additional 4 deals under contract, same thing, off-market, no competition at all. And we're still bidding on the marketed deals. It's so hard to win. We keep getting second and third place because people make these crazy offers. So yeah, I mean, I think if you can leverage those broker relationships like we've been able to do, then that gives us a big advantage here in the market.
Wow. So the 4 deals that you guys were awarded, that you said were completely off market, there was no competition. You were literally the only people looking at that deal and offering on that deal. There was nobody else bidding against you guys?
Correct.
Wow.
These are brokers that we've either done previous deals with, the first few deals, and we performed and established that relationship, or they're brokers that have been seeing us and we've been touring or making offers on deals and formed that relationship, and they know that we're for real. And so it's just a matter of, if you can build that relationship, then you can be one of the first eyes to get a look at it and just pounce. You know what I mean? Like, I'll give you an example, Barry. So I mean, this was in November of 2020. So a few months ago, I get a call from a broker at 4 p.m. saying, hey, I got an off-market deal. There's another group out of Canada looking at it. We're going to show it to both of you guys. And I said, can you tour tomorrow at 9 a.m.? He said, yeah, I can tour. So we tour the next day at 9 a.m. We really liked the deal. We underwrote it that night. So he sends us financials. We underwrite it. We tour the next morning. I spend the next 3 hours that morning shopping all the comps. So I shop all the comps. I call my business partner, Bikram, and he's like our numbers guy. And we plug it all in, get the deal underwritten. And we had an offer out by that afternoon. So in less than 24 hours, we underwrote it. We shopped the comps. We got a debt quote from our lender. We got an insurance quote, and we made an offer. And then they accepted the offer that night. Okay. And then in less than a week, we had it under contract. We had negotiated the PSA, and we wired earnest money. So that group out of Canada never even got to see it. They never even had a shot. There was a deal a month ago. I get a call for the deal. I tour it next day. We put in an offer later that day. We get it awarded. And literally 2 days after the day that I had gotten the call, I hear from the broker, and they say, hey, there's another group that just offered 300K more than you guys. They showed it to them as well, but the seller said he's already awarded you the deal. They're not going to go with anybody else. So it's really, it's either being the only group that sees it, or you're part of like maybe 3 to 5 groups that see it, but you jump quickly and you pounce on it. That's what we've been able to capitalize on to get these deals to make sense. But with that said, Barry, for every deal that we do, there's at least 5 to 10 off-market deals that we get that don't work. So just because it's off-market doesn't mean it's good, right? As you know, and everybody knows, it doesn't mean it sounds cool, right? But it doesn't mean it's a good deal necessarily. And we're constantly turning away off-market deals and market deals because they just don't pencil. So that's what we've been able to do. Is it's all about cranking volume and cranking the relationships.
Yeah, well, it seems like you guys do a few things, right? It's, for one, you guys act quickly. So like you said, you're touring the property the next day, you're doing comps, right? You're secret shopping there the very next morning, the same thing, and you're making an offer that afternoon. So you're acting really, really quickly, which I'm sure gets brokers' attention. But also, you guys have a track record at this point. People know that you close. People,
Right.
you guys do business the right way, right? I'm sure you guys are not retrading people. Making an offer then retrading. You guys close when you say you will, unless there's something completely unreasonable. You guys have built that reputation on there as well, right? But you guys are action takers. You know what I mean? There's a few things there, and that's, I think that's a learning lesson for everyone, right? It's easy for people to say, oh, these guys are just getting off-market deals and blah blah blah. Yes, they're getting off-market deals, but they're analyzing them quickly. They're taking action. They've built that reputation, right? All these things that help to get that deal, right? It doesn't just happen. You don't just get an off-market deal and then all of a sudden you guys have closed on all these deals. You guys are doing all the right things, obviously.
100%. Yeah. And it takes time to build up to that point, right? Because you have to have the relationship. You have to build the relationship to get to that point. And you have to have infrastructure in your company, whether it's you or your one other guy, whatever, to be able to feel confident to adequately underwrite a deal quickly. You know what I mean? And get all the information that you know to make an offer on a $15 to $30 million deal. You need to feel confident, like you know what you're doing. And it just takes time and experience to kind of get to that point.
Yeah, and with that point, with you guys getting awarded deals, are most deals you have to go hard with money day one? Is that something that's
most of them are in Phoenix? Yeah, it is a crazy market. We've several times, probably more often than not, we're going hard day one with no look, no inspections. You know, there are a lot of deals where you can get what's called an access agreement, where you can get in there and look at the interiors prior to going non-refundable. But yeah, I mean, and so that all comes down to your underwriting. Okay, so I mean, we've never done an offer or gone like that without touring the asset at least and seeing a couple of units. But you have to have budget for all the major capital items so that you feel confident that you can go hard day one. Okay, so we'll have budget to completely replace the roofs, to replace the plumbing, to redo electrical panels, all these different things that we've learned. We have an idea and know how much it will cost. So if in our underwriting model we have budget to absorb any of these issues, then we don't mind going hard day one because we know we can fix any problems that may come up.
Right. So that's what gives you guys the confidence. You've budgeted for not maybe the worst case scenario, but definitely some hiccups along the way.
100%. Yep.
Yeah. Very cool. What do you think has been some of the most important things that have led you to guys, because that's a phenomenal achievement by anyone's standards, right? To go from that first deal and 24 months later to be at 700 units. What do you think has been the key recipe for your success, you think?
Yeah, honestly, I think for me personally, it's just having the faith, so I'm Christian, I'm a believer. I think just always having the faith and staying focused on it, you're going to get there at some point. And there's a ton of adversity, right? It's a lot of obstacles to overcome, but you have to believe you can get there. And that sounds cheesy, but it's true. And when you start to have a goal, then you start to think, okay, what is necessary or how can I get there? So I think for me, my biggest ability has been able to try to find other people to help me out or to help get to achieve my goals. Okay. I feel like I'm pretty good at finding complementary skill sets. So if there's a weakness that I have, then I'll try to find somebody who has that strength, right? And I can complement them. So I think really just connecting with the right people, whether it's the brokers, the investors, your business partners, trying to navigate issues during an escrow with the lender. There's all kinds of things that come up, right? So I think always just staying calm, having faith, and keep pushing forward and connect the right people, you'll get there.
Yeah, and one thing I picked up from you, you're definitely an all-in guy, right? You know what I mean? And it's awesome. No, I think that's a compliment. You put 160 of your 165,000 that you had, you sell your house, and then you put that money hard on the next week or whatever it is, right? To get those deals, right? And
you don't have to do that to be successful, Barry. You're right. That is kind of my nature, but I don't want people to think you have to do crazy, because I know it sounds cool on a podcast, but people are like, I don't want to lose my shirt. You don't have to do that to be successful, just so people know.
No, I agree, but I think it definitely has helped you, and I think it's definitely something that is not a bad thing, right? Especially someone as you has worked so hard and built that knowledge and understands and has had that success, right? It's not as risky, right? It's not as it just like putting your money on black or at the casino, right?
Right. You have to believe in what you're doing. You don't want to blow it you don't want to think you're going to blow it. You have to really believe it and feel confident.
Yeah, absolutely. Well, man, this has been really interesting. There was so much more I could ask you. We could have dived in so much more, but maybe for another day and another podcast, we can dive into some other deals and some more.
We'll call it round 2. We'll call it round
2. Absolutely, I could easily do 10 rounds, man. This is awesome, man. I love everything that you've done. But as this show is called Wrestling with Real Estate, I try and incorporate some wrestling-related real estate questions. So the first question is, what would your wrestling name be?
See, you asked me this at the beginning. I'm trying to think of something, Barry. I'll go with Z-Force. How about that?
Okay.
Z. Yeah.
That's badass. I like that. Z-Force. Okay, that's awesome. That's awesome. So every wrestler has a special move. What is your special move?
Yeah, I think I would just kind of go back to trying to connect people, right? And I feel like if I have a goal, I'll figure out a way to make it happen. I'll just constantly envision it, focus on it, and it'll pop up, or I'll start making phone calls and try to pursue learning about how to get there. So I think it's really that finding the person or finding the solution is my special move.
Very cool. Very cool. What's been the biggest body slam you've taken?
Oh, biggest body slam, man. We haven't lost any money or anything like that, fortunately, which has been good, but we've gone through very stressful escrows. I'll give you an example. We just closed a deal about a week ago in Mesa, and it had to get extended a few weeks because right before closing, there was a zoning issue that came up that we didn't know about, the seller didn't know about, and it was underparked per the zoning requirements. So the lender tells us shortly before closing, we're not going to fund because this thing does not have the appropriate zoning. So we had to hire a zoning attorney, go through all this stuff in a matter of a couple weeks, and it's always stressful when we already had $5 million worth of investor money sitting in an account ready to close. And if we wouldn't have closed, we would have lost $450K of our own earnest money, our own personal cash. And at first the seller was being resistant and not working with us because they didn't believe it. And so it put us in a tough spot, but we were able to resolve everything and get the zoning figured out and close. So that was a body slam, so to speak.
Yeah, I'm sure that was maybe some sleepless nights.
Yeah,
sure, right. Yeah. So was there a moment that you were standing on a top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah, good question. Okay, so that's a good question. So I'll give you an example of when I didn't overcome it, and give you we did. So when I first started, like I said, I had a lot, and this stuff is always scary, by the way. So it does get easier, but there's always anxiety. But when I first started, I had no experience. I was cold calling mobile home park owners, and I had one who actually had a pretty good deal and would have probably sold it, but I hesitated. I was too scared to even reach out, and call and make it happen. And I waited over a week. I procrastinated, analysis paralysis, as they call it. And then I finally called, and they said they had just sold it. They just under contract to somebody else. So I hesitated at the top of the ropes, Barry, and I lost it. Another one was, I would say that going after that first deal was super scary. After you make the offer, it's scary to make the offer, but then it gets accepted. And you're like, oh crap, am I really going to do this? Because if I don't raise 1.4 million in 60 days, I'm going to lose 25K, and that's just small stakes now. Like we have much bigger stakes now. But I did it, we went forward, and you put yourself in these stressful situations where I'm the kind of guy who put me up against a wall, make me desperate, and I'll figure it out. You know what I mean? And I think a lot of people are like that. When you actually put them in a pressure situation, you'll do things that you didn't think you could achieve, and you'll make it happen, right? Just because you have to.
Yeah, you burn the ships, right? So then you have no choice to fight for your life. Yeah.
100%. That's right.
Yeah. Very cool, man. Well, this has been so much fun, and it's so much great information, and just so cool to see someone being so successful. It's especially in in a short period of time, right? And it's not that there hasn't been a lot of hard work that goes into it, and a lot of sacrifice and a lot of determination, a lot of grit, all that stuff, right? But it just goes to show what you can achieve in real estate, right? Yeah, exactly, right? You started like not necessarily with nothing, but you wouldn't had millions of dollars at your disposal, right, to go invest in these deals. You made it happen. You built a team. You found people to work with you. You went out there and did the work and educated yourself and was willing to sort of take educated risks, right? You kind of, and that's what it takes to be successful. So, man, you deserve all the success you've had. I know, obviously, it seems like this is scratching the surface. I'm sure in 2 years' time you'll be at 7,000 units. The way you guys are going. So I think that's awesome, man. So,
let's hope so. Yeah, no, I really appreciate it, man. Yeah, thank you.
But before we go, if people want to get out and if people want to reach out and get in touch with you, or if they want to find out more about what you've got going on, how can they do that?
Yeah, no, thanks, Barry. Yeah, you can just go to our website. So it's Rise 48 Equity. So RISE48equity.com. You can email me, Zach, ZACH at rise48equity.com. And you can set up a call with us too. So if you want to learn more about what we're doing, or you just want to, if you need advice or you need help, I'm always happy to help people out too. You can go to our website and set up a call and go from there.
Very cool. Very cool. Well, I appreciate you taking the time, man, and enjoy the rest of your day out there in Phoenix. I'm sure it's, is it cold there, or it's pretty cold?
No, it's nice, man. It's 70. It's beautiful. Yeah, it's nice here.
Yeah. Well, enjoy the rest of your day, man. I appreciate you making time for us.
Yeah, thanks, Barry. Appreciate it, man. Thanks for having me on.